Good morning. Well, this should be where it runs out of steam. It's closed the void. Um, Bit surprised that it even got there personally, but it did. And so now up at this resistance area, we'll see if it starts to roll over. Well, I guess it's already rolling over. 434. No, not much. Pretty much still up there. So now it's got the void up here. And to continue this upward move, it's got to, mentioned was yesterday that it's got to create support. So while it gapped up above here yesterday, and it was some resistance, it never broke a prior hourly bars low until the end of the day and then flipped right back up again. So a little shakeout that occurred. So, from this time frame perspective, it never broke a prior bars low. And this is what I use anyway for a longer term trend intraday, along with the 5 minute. And you can see on the 15 minute, it's got these pivot lows, which it never violated. It didn't break the trend on the 5 minute, at the 15 minute. And if we go to the 5 minute, it never violated the trend on the 5 minute. So why I'm telling you this is when you have a market, a stock, what have you, that makes such a run and so fast, and it reaches what we believe by looking to the left, the destination, it doesn't mean short it. And you have to have a plan. And going down to too small a time frames and focusing on little tiny things like, maybe this little pullback there can get you chopped up. So these are the time frames that I use in intraday, and I don't go down to a 2 minute and sometimes even a 1 minute when there's really momentum. But this has to roll over, as it reaches the destination on a higher time frame, and we can now start thinking that prices can roll over and there may be shorting opportunities intraday. It's got to change trend on a smaller time frame. And if you go too low, like a lot of people get attracted to 1 minute charts because they believe that the risk is relatively low. Well, your stop is tight, but you get stopped out a lot. So, waiting for a break of the trend on the 5 minute is a starting point, because that where potentially will evolve into the hourly and come down here. So we'll see if that happens today. And the cues, looking at stop. Just reading here. Cues, push through this area. And, I'm kind of thinking like, okay, it was there. It was kind of a wide, kind of relatively wide area. And so this didn't move very much. It really, most of the day was going nowhere yesterday. And then, it kind of ground up a little bit. And then there was that whip, like it rolled over and popped right back in again, up again. Like this late day buying, which, when I saw it happen, I thought to myself, after this crack that broke major support and up a couple of days for, the buying frenzy in the last few minutes of the day, I thought, that just seems, not seems, I mean, I've seen it many times. It's just an early indication that just too bullish. It's like buyers stepping up right into the end as it's coming up into resistance. And well, for me, I thought it looked as a heads up that they're just wanting to jump on board here in a pattern that wasn't starting a move. It's potentially where the momentum would stall. As we finish today and into tomorrow, we'll see what this weekly bar looks like. If it's looking like this, obviously it's a big positive that after this multiple week run and a red bar to get an immediate reversal. I mean, we could be in a trading range here for a while. I think even if it was to take out this high, This is more just of a pattern that historically points us to a slowing in momentum either way. And it's not this. It's gotten wider and more erratic, and that is more indicative of a period of consolidation. The professionals close the day. Well, Tony, that is the theoretical, but when I see this kind of price action, and I'm just basing on price action, there could be thoughts based on what people say as to novices act at the beginning of the day and professionals at the end of the day. And I don't think that's so much true. There are these kind of sayings from the past, and they really came about before the internet days, because I've heard that from way back when, and when I started, there was no internet. So is that really, the case today? I don't think so, because we see plenty of times where the market opens up and it just, we saw it 2 days ago, market rips higher for an hour and a half. So does that say all the novice traders are in there buying, participating in that, and not institutions? Heck no. So anyway, well, tech earnings, next week is a monster week for tech. So all of these things that are thoughts have to be put into the context of a chart. And considering the fact that Microsoft, Apple have had monster runs, the earnings supporting this run could be a gap and crap. And so if they are buying in anticipation that these earnings are going to be so great, it's unlikely that it's going to be another run like this over the course of 2 months. And, buy the rumor, sell the news. Remember that saying? Those earnings coming out and beating expectations. Microsoft might come out with some, phenomenal earnings, and the thing gaps down. So, we'll see what happens. It's normal to think that, these stocks have had incredible runs in a short amount of time, and they're likely to consolidate the gains for a while. Right? And, looking at the charts, which is what we do, Apple, that's a vertical move, far from any support. For this to go through a period of downward, upward, sideways chop for a while is totally normal. Let's see where other things are. And some comments here. Robin, will sell instantly at market open, not at the evening when there's no volume. Well, Robin, you're saying they'll sell instantly at the market open? Maybe. Look, whatever they're going to do. So having general thoughts about what happens, what institutions are doing, all of those things can be useful. However, is the move beginning, or is the move likely ending? So while some might sell here, well, we have to rely on charts. Those thoughts are secondary, right? Because a bottoming pattern and an igniting bar is supportive of a bias that it's going to go higher. After prices have run far away and thinking, there's a lot of buying at the open and they're going to sell into it. What do I do with that information? Do I short? No. And I have to wait for some pattern on the chart. So all of that thinking, while can be useful at times, it could really steer you in the wrong direction if it's not aligned with the proper chart analysis. All right. Where was I? Okay. Qs, diamonds. just a giant mess. Overlapping bars, gaps. And this chart is a better representation of what's going on within this market. Mid caps. Look at the NYSE composite, which looks similar to this. A market that's whipping up and down and going sideways. And this is more representative of our market internal breadth, which got spiked to a historical extreme low, coming down here to minus 300. And now it's almost back to zero. And looking at this information and looking at the market going up like that while it's violated the trend, right? This doesn't tell you to short anything either, but it tells you what's under the hood. And that's why we use it. All right. Transports, another representation of the real market. The breadth is narrow, so picking the right things at the right time. Russell, we've got more charts that look like overlapping bars and erratic price action that are just damn ugly. YSP outperformed YPS, which means, well, maybe it outperformed just based on the move, and I think, and because of that, those gaps, I think RSP is a better one. So, this came nicely up off of the low. It came down to the bottom of the trading range, similar to what the Russell did, and now it's up into the resistance area. So while it outperformed, equal weighted versus SPY, which one do you really want to buy anyway? Just another way of looking at, the few stocks that are really moving this market. All right. We looked at all of those, looking at the futures. They're stalled here. So this is breaking down through the hourly prior pivot low and major support. So the beginning of a trend change on the hourly time frame. You can see the 15's rolled over, the 5 obviously already going down with a little bit of momentum there and coming down to some support. And Q's beginning to break major support on the hourly time frame. And Russell, same story. YM, same story. It just makes sense to see some weakness come in here, and the end of the day tomorrow, of interest will be what that weekly bar looks like. And if it is a bottoming tail bar, this becomes a downward shakeout with the sideways movement beginning, which is, symmetry to what's there. And that says it's going to go higher. But if we have a bottoming tail bar, of course, our factory work says, what's our first reference point of support? Prior bar's low. And that becomes a critical point. Let's just look at the Dow. Bottoming tail bar. And futures, this Bitcoin starting to turn around down at these pivots, bottoming tail bar at the end of the week. So looking at bottoms, which tend to be treacherous, to actually before making the turn, and just like here, where they make the turn and it took out the pivot high, came all the way back down again. That's typical of a bottoming pattern. Now, as it's retesting this and these pivot lows, got a nice little wide range bar there, and that that's a good sign. To have multiple pivot lows on a bottom. and supportive of this holding, that 30,000 level. It's true, Dan, but he's very flexible as far as his bottoms go. So, crude oil, nice big move off of the low, coming down to the support, looking to the left, coming up to resistance. Momentum's likely to stall. Gold, rolled over there. I think a stay away. Silver broke down. Stabilization there yesterday. And the dollar, which has just been ripping, that started to stall. And look to the left. It's up at some resistance there. The euro futures, they're down here at support. So the simplicity of looking to the left just make it works. And then once it reaches areas of support or areas of resistance, looking for confirming candlestick patterns. Keep it simple, stupid. It works. I think we've covered everything we need to today. 10-year bounce up here and turn. So today, what we're looking for to see if sellers want to show up with any authority, they're going to have to do some damage. We'll see what they can do. Turn days can be difficult, especially turn days that reach resistance, because buyers tend to be much more ferocious with not giving up versus the fear factor as things go down, tend to exhaust themselves and then turn. I doubt anything major. Well, I tend to agree. It's kind of stuck in between these different areas there, and but we'll see what happens. And we've already got signs of weakness, and so we'll see how much it goes down or not. All yours, Dan.
Good morning. Ferocious. Yeah, I know it. We're still on the liquidity, buying the dips. Nothing's changed with the charts. Every failed dip number 94, I say. But when they start taking the punch bowl away, does anybody really think it's going to go ignored and this is going to keep going up the same way it has been when they start tapering those bond purchases? The Congress is still doing their monkey business with these bills. That's so sickening to me. It's just how dysfunctional, or whatever. I mentioned to Greg, I said, look at a TBT. It's a buy setup on the monthly. So it's a Bull Island reversal on the daily. Nothing to do now, but maybe when the tapering starts, right? I mean, just think about it. What does tapering mean? Well, the government's buying $120 billion of TLT. Well, not of TLT, but you know what I mean, bonds. So that is keeping bonds high and rates low. That's their goal: keep rates low and flood the market with money. So if you got a natural buyer walking away, well, it makes sense that demand's going to go down, which is going to push yields up, unless the economy is really in the tank, and then maybe yields aren't going to go up. That's just something to think about. All right, we still have pretty light inventory. We were playing around in the crypto space yesterday. Look at a riot here for a day trade. I like that 15-minute chart. That looks great. So that's going to look like a favorite day trade long. I would love it to happen at 30-minute high just to see what the broader markets are doing. We did a Mara put spread. We nibbled around in some of the EV space. NEO did a put spread. Home Depot. So Greg, you didn't answer me in chat. do you like Home Depot over the high here? The pattern looks great. Red bar ignored, price void. So my only concern, as I mentioned yesterday afternoon, is, now we're up 3 bars of resistance. If the mothership is gonna get tired, then that's gonna lose steam as a general rule for anything, unless it's what we say on its own page.
Well,
But
you answered your own question. So, putting a stop under the wide range bars low and seeing maybe it goes sideways or pulls in today, or the market rolls over, and by next week it digests, and the market digests, and if the earnings come out, all that, such so on and so forth. So, you know,
Well, I'm not sure if you answered the question. Is the broader market resistance just a veto? I don't want anyone to hear about it, or if it triggers, you go for it.
yeah, I think
But
the answer is a smaller position with a bigger stop, and let it do whatever it's going to do.
all right.
I mean, look, to try and decide, is it going to fail or not? I don't know. Like you said, the pattern's good. It's a
Yeah,
big
it's
bottoming pattern, and it's a wide range bar. Is it late to the party? Yeah, but it didn't go down like everything else did. It's got that relative strength as it's, the market sold off on those nasty days. This held up relatively well.
yeah. Yeah, it's a big old reverse head and shoulder, left shoulder hid, 100% retracement, sideways price void. Yeah, it's a beautiful reverse heading shoulders. Well, Thane, two things. Did it trigger? So you had a wide range closing breakout, so that's good. It gapped over the entry, okay? So then whether you got an intraday pullback or not, that's fine. Number two, it's not a 1, 2, 3 because yesterday is not an inside bar in the upper third, okay? Yeah, Steven, I agree with you. Clown shows, right? I just, now they're, gonna have to start dancing around the debt limit. And I was reading this morning, I told Greg, we're at 28 point something, uh, deficit already. It's like, do you remember the days where it was 1 trillion and then 10 and people were freaking out? And then, oh my gosh, it's 15, now it's 20, and they had the debt clock. Do you remember the debt clock they were showing all the time on CNBC and Times Square? Once it hit 20 trillion, they're like, oh my gosh, the world's going to fall in. You don't hear a word about it anymore for the most part. Oh, just spend it. Who cares? Well, that's hurting savers, and it's inflation. It's the buying power. Our buying power stinks. Because try to take your same $100,000 whatever savings account you have and go see how much you can buy with it today. Go buy a car and a house and some groceries and tell me how you did compared to a year and a half ago. RB Square FE. Square, you missed the entry. There's no pattern there. We mentioned that yesterday that um, it was rocking, probably on the heels also of Bitcoin being up. And I said over and over and over again the last 2 days that there's so many damage patterns that I, this one was sideways and then up again, so it's a little different than a beat up, cruise ship bouncing in a downtrend. But the story the last 2 days was crash daily charts, but amazingly bullish 15-minute ones. But there's no pattern there on Square. FE. Oh, FE is popping 3860. Put it in a window, see what happens. Put it in a 5-minute chart, see what happens. Hey Debbie, the market rallied when you were gone. Thanks for that. And now that you're back, it's probably going to stall. So thanks for that. All right, where was I? HZO, bottom right here, bottom right. And do you all remember yesterday, MT Live, breakdown failures? This is a great example. Look, we had three, not one, Debbie, not two. We had three breakdown failures. What does that tell you? And some people say charts don't work. Yeah, right. People like HZO at 45 bucks. That's what the charts, it's right there in green and red. But the problem is, okay, so now where do I get on board? So ideally, we want a continuation pattern. We want a pullback. We want sideways. But look at this weekly. There's a big engulfing bar, engulfing 2 months of weekly data with a price void. So this looks fantastic. I just now need an entry. And preferably it'll take 3 days. Let it bobble around and give me a continuation pattern. But you know, it had earnings, but that's a beaut. I love those patterns. So, and like I just said, I hope it takes a few days to set up. But McGraw earnings. So let's see if we can do a put spread. Oh, Debbie, you did not. Don't be joshing me as soon as you come back from vacation. Come on now. Yeah, I don't like any of those patterns. Let's see. Go 33 and a quarter. Okay, here's a bearish gap. Okay, so here's a candidate for a 30-minute low. Go 30-minute low. Go kind of rhymes. UNP 225. Wow, big gap. That's a railroad. That's going to help transports probably. Big gap, but no pattern. McGraw, if you can get a put spread, it's fine. I asked a question earlier. Does anybody know if this is a Reddit toy? It sure has the footprints of one. You know, if it had high short interest, and there, if so, they get an A plus. They get an A plus for their shenanigans. That is a nice short squeeze if they're causing that. WISA 494, gapping way up here. But, Debbie, you know buts. Look at the monthly. It's coming out of a coma. So here's another one. Maybe it takes a week to set up of chopping around, backing and filling. But this is that's going on the list. You know, nothing to do today. Dairy Queen, gap's too big. I don't know if that's earnings or what, but gap's too big for me. IGC, the gap's too big. Gap's too big, but you know, that's coming out of a coma on the monthly. But I mean, look at this. You know, you heard me say yesterday, I just put tape on the price. I don't even care about the price. I don't care if this is $1 stock or $8,000 stock. The gap's too big for me. You know, unless it sets up for an intraday trade. Now here's one. Look at the monthly as a buy setup, deep retracements. But here's another one where let's see if it sets up in a week or so. I see Home Depot popped here. And I really want this to pull back a little bit. Home Depot would also, well, accuse spiders off to the races. You heard me say yesterday into the close. Based on this close, you heard me say it's my bias is higher today until it's not. And I, you know, this chart to me suggested we were going back to this red bar's high. And, you know, on the first bar, we were talking about my bias also being changed from bearish to neutral in one day because of that wow bar. But McGraw, if you want to check Home Depot put spread, CLI, Sam, it's at the top of the range and no pattern. I have zero interest in that, and a possible breakout failure with the bearish gap. Diddy here, this is this Chinese, Uber. China is just after this company. That's a stay away for a while. Nitker, I think it had earnings, but that's a nasty gap there. CCI, nasty gap, but it looks lower, but reward to risk. I don't like gap trades that have fluid moves pre-market because they're too extended. Texan got whacked. That's a nasty gap for a big old tech stock. The gap under that big wide range bar. I'm seeing a lot of, even though